Welcome back, everybody. Sive is here with the ForexPeaceArmy.com. Let's take a look on the gold market. So yesterday we've got no news. So directly to the technical picture, it's payrolls report stands right around the corner, and the major area that we're considering in 32.46 and 618 FIB support, and actual downside ABCD target where we could get this wide Gardner's triple to buy pattern. That's the most important area for daily chart, and we hope that here we could get some reaction from the market, so maybe we'll get some bounce. So next week we intend to keep an eye here on some bullish signs on intraday charts. For now, we're watching for a data release. Overall technical picture remains bearish, and actually the only reason why you could think about taking a long position here is probably if you expect some really big changes in the payrolls. So for instance, if you think that it will be significantly lower than 102,000, that's average expectation for today, at least by the Reuters poll. So we suggest that if it will be significantly lower, then you could think about taking the long position. But overall technical picture suggests downside action, so it in general looks bearish. If you take a look at the follow time frame chart, yesterday we haven't got any patterns that we discussed, so here with this pullback we haven't got the bearish grabber, but market later keep going lower. So, and for now, the only pattern that I could probably offer to you is a butterfly on the hourly chart, very similar to the euro currency, but compared to the euro currency, this butterfly has very important feature that its target 32.40 perfectly agrees with the target of the ABCD pattern. So in fact, this butterfly could finalize this pattern if payrolls will be strong enough. So if dollar will keep going lower, making pressure on the gold, and gold could try to complete this pattern. If you would like to take the part with this pattern, that's probably not necessarily worrying to you, but it relates directly to the non-farm payrolls release and correspondingly has more risk because we do not know what numbers will be. When you're taking the bet, you suggest that payrolls should be positive, better than expected, if you would like to take part with it. At the same time, risk is not really very significant. Your stop has to be above this area. So here is actually the validation point of the butterfly. That in fact the only pattern that stands in place. So if you're not ready to take this risk, then probably it's better to sit in hands, do nothing, and wait when the market will reach the predefined area and see what reaction will be, if of course it will reach it. But whatever will happen, either market will start pull back earlier, if payrolls will be bad, or if it will complete the target. Anyway, some reaction around this level has to happen, and that will be actually the background for our trading plan on next week. For now, the only pattern that I see here is just this butterfly that stands on the hourly chart. You could think about whether to take part with it or not, because we have a few hours until payrolls report, so you could make the decision on it. That's probably all for now. I'll see you in the weekend.